Yo, yo. Hope everybody had an amazing break, whether you're celebrating Easter, Passover, what have you. It felt like a 4 day weekend, so it's nice to be back. It's nice to be looking at the charts again. I was missing this stuff over the weekend, but it's been an extremely long day. Um, I want to go over some things pretty quickly, some new things that are really important to the timing about what's going to happen. We are basically looking at three possible options for AMC and what looks to be two possible options for the S&P. So let's just talk about AMC first because we know we are running this fractal right here, but it's extended. It's been this one since January 13th. This is the way I had it towards the end of or middle February, something like that, which at the time looked plausible and looked very good if 413 was going to be the top for the S&P, which we now know it's not. But while this chart looks really good, it's following the fractal, it's following the trajectories, it's following the percentage moves up and downwards for the most part, and it actually followed to the penny my thesis of breaking the 380 support down to 370, which was the zero point 0.5 fib on the macro, which is hilarious. This whole thing looks to me like one big fake out. So this chart that we have right here with the 960 price target by OPEX, we can scrap this because it's not happening. This would only happen if SPY goes to 428, 434. Now that we know that that's the top of the SPY range. If it was 413, okay, then this would be it. But it's not. We're going to hit 413 tomorrow on the S&P 500. So we won't see 960 tomorrow. From where we even are, it's an 80% run. You're not going to get an 80% run in AMC this week after we already made, we were at what, 367. We are already up 43%. Okay? So we're not going to get a 120% run in a week. Not without SPY making a serious move here. So that is why I extended the fractal, and it's the one we've been tracking. The one we've been tracking looks more like this red one here, which is what we talked about for a while. Still in that 960 range as your price target, but it was going to be basically the first week of May. Now, I went over trading with emotions charts over the weekend really quick, and I know his volatility zones in that 13-day window, which particularly happen basically every month and after every quad witching cycle, which last one we had was in March, towards the end of March. But we are currently in one of those volatility zones. So that is why you're seeing all this price action on AMC, because the S&P is nearing its crucial 1618 level on the macro fib. Now, this is why I had the 960 price target in this range. But because now we know the SPY top is extended, we know this isn't the AMC run that we were originally expecting. I still believe that we are going to get that run from 9 to 10. However, what no one is talking about is narrative. And the S&P 500 and meme stocks and all this shit runs on narrative. People, they say to me a lot, like, oh, well, it doesn't always have to work on narrative. Like, there's stocks that run 1,000%, Nick, and for no reason seemingly whatsoever. And you're absolutely right. But those stocks don't have the entire world looking at them. Okay? The American market is the most powerful market in the world. Hence, it needs to appear to be the most reliable and the most natural. Okay? You're not going to get a 200% move on a movie theater stock without serious news to back it up. Plain and simple. Like, I don't want to keep coming back to this. Like, a lot of people keep talking about June and shit. Like, that was a different time. No one gave a fuck about AMC in January and June of 2021. No one was talking about it. It was only on Reddit. It wasn't on CNBC. Okay? So now it is on CNBC. So it has to make sense. It has to make sense. When is trading with emotions next 13-day window, guys? Right here. And what happens in this window? Well, two things. The end of June is the quad witching cycle for Q2. June 16th. It's also June's OPEX date on the monthly expiration. Okay? So you can expect it damn well not to run up to that date because that is where the hedges come in. And all the dealers, market makers, they reposition themselves on those dates. So what happens after June 16th? 4th of July. And narrative-wise, what happens in June and July? Blockbuster movies. If you look at what movies are coming out in June and July, Indiana Jones, Transformers, Spider-Man, fucking Mission Impossible, I think Fast and the Furious too. Just, they are going to blow it out this summer. Blow it out. And that's the reason for the squeeze. Okay? May was wrong. April was wrong. We're going to squeeze at the end of June. And the stock market every single year, if you look all the way back to like fucking 1870, 4th of July weekend, the stock market loves running. I think it's the previous 10 days, and each day after 10 days, so 8 days, 7 days, 6 days, the odds of you hitting a green trade on a bullish ticker, you know, it goes up exponentially. It's like 20% each day, more likely. So everything lines up on a narrative standpoint, which is what we care about the most and what matters the most, frankly. Now, let's talk about the option chain quick. Spoke with Orlando. He sees a ton of downward pressure leading into both May OPEX and June OPEX. Okay? So, institutions are currently going short longer term expirations into May and June. All right? They're not going short into May and June because it's going up. They know where it's going. Okay? This is a pre-planned algorithm that repeats itself. It's based off quad witching cycles. The institutions position themselves alongside and in the correct means that they have to hedge whatever they have going in the background. Now, remember, when downside pressure comes in, okay, there's delta decay in some fashion if the stock is moving upward, right? Like, or staying flat. If they're hedged all the way out to, if they're short all the way out to May and June, and AMC, you know, right now is sitting in a spot where it currently looks bullish, right? They're losing money every single day, right? They get the theta, the delta decay. So those trades must be hedged, which causes upside pressure in the short term, right? Remember market makers, they like Citadel Virtue, they always need to stay delta neutral. Like they're trying, like they don't take sides, right? They don't go long, they don't go short. They just want your fucking business. Like they're making a bid-ask spread and they arb in between. And payment for order flow exists. It's a thing, right? It's like think of it like a broker. People deal on these platforms, and whatever brokerage app gets commission, which pays fucking Citadel to even have the liquidity on that to begin with. So a lot of times when you see downward pressure from puts or sell puts in the money, when the market makers hedge those options, they buy shares to hedge, and that's what sends the price up. So the option chain matches the option chain matches the narrative, which is the most important thing here, because the option chain controls everything. Now let's just quickly look at trajectory levels as well, because this is it was something I was looking at on Saturday morning. Every single run that AMC has had, going from the Jan into the June fractal. Now this is like Jan, June, right? Jan, June. Jan, June. It's the same thing over and over again, right? Jan, June, Jan, June, Jan, June. Every time it does it, it's around a 70 degree angle. And if we take some 70 degree angles and look at our price targets that we want to see right now, it goes exactly where my price targets were that I posted today. So we're just trying to judge with previous price action, where from a trajectory standpoint, where this price target could be in the near future. And let's not forget, it's not just the trajectory levels, it's the macro fib levels, which 707 is at 590, which just happens to be right next to the volume shelf that I told you guys about today at 605. That's the next ceiling we have after 550. And then the 786 is at 710, which happens to be at the ceiling that I posted today, which is at 705. So these are the reasons right now that are most important as to why that these are our price targets. So what is our current position right now at the S&P? We're at 410. Okay, hit 410 in after hours. I want to see 413 on SPY basically by tomorrow. Okay, so if we get 413 on SPY by tomorrow, leading into CPI, and CPI comes out cooled or flat, you can expect 415 pretty quick. However, this can also, because it ran into CPI, can very easily be a sell the news event. So we're at 410 right now. We could hit 413 tomorrow. You can see AMC make another little leg up here to maybe, where are we close today? 524. We could see AMC run right up to 550 tomorrow, right? And then the S&P can sell the news on CPI, and it can retrace all the way back to 410. So say it goes 413 and then retraces back to 410 into Friday. The week is over. Okay? You got 410 SPY, you got 520 again AMC, right? Something like that to close the week, because remember, I think Max Payne this week is around 5. So they're going to want to keep it in this area to close the week out. But next week we can make a more serious move from 410 on the S&P all the way up to 415, and then you get your AMC blow off top, right? Which can take you to 6. It could take you to 7. Those are the next two levels. It will not go higher than either of those two levels. The only way you breach $6 and $7 is if the S&P continues and goes to 420, and it is just highly unlikely that it's going to happen that way. 415 is the highest I see it right now. Let me pull up the S&P chart. So this was the original route that I had in the white, right? Because I thought 413 was going to be the top, but let's scrap that for now, because the newest thesis is that AMC is going to run the last week of June into 4th of July. And if that's the case, the S&P 500 has to follow suit. Okay? This is your new route that I will be using moving forward. This is how I believe it's going to take. You have your volume shelf VRVP level right here at 415. I don't. It's also the supply area on the latest run that we had back in Feb. It's all 415 right here, right? So we haven't tested that supply yet. Like, we're below it at the bottom of it. I want to see the top of this supply tested. But it doesn't have to happen this week. Like, here's CPI. We can easily run to 413. Here's 410, which is where we are now. We could easily run to 413, like right here, and pull one of these. Run to 413. We come down into Friday, and then we jump right before OPEX to 415. And then once OPEX hits and the option dealers have to readjust their positions, and remember, they're short AMC into May and June, so they know something. Like, they know something's coming, and I just want to follow the flow with them, right? The S&P is going to get hit here after OPEX. We're going to see 404, maybe even 401 into mid-May, okay? Once we're done here, that is when you'll get your blow-off to 434, 428, whatever, that range. And that's when AMC will make its move to $9, okay? Which is right here, Friday. June 30th, okay? Remember, here's the OPEX in June, the 16th, where all the positions close. So it'll be after that. It's not going to be before it. To be concise, AMC had 3 possible routes that it could have went. It was this near-term one, blasting off to 960, which we know is not going to happen because the S&P is not going to 430 in this time frame. It's too fast, okay? The next one was leading into May, this red route. Right, it's the same fractal, just extended. This is the same fractal, yellow and red, just extended, right? So this one, the yellow one up to 960 right here would have been too fast. The next one up to 960, which would have been May, could possibly be it. However, I still believe option 3 is the way we're going to go, which is this. Okay? Where's June? I think it's going to be extended one more month. And then 1025 is what I have as top there. If it looks faster, okay? If it looks faster, and instead of the last week of June, it actually looks like it's going to be that second week of May, okay? I will let you know immediately. But as of right now, Trading with Emotions, his next 13-day window on his volatility zone is the end of June. It's no coincidence that it's right after OPEX. It's no coincidence that it's leading into 4th of July. And it's no coincidence that there's 20 blockbuster movies being released during that time. Okay? Follow the common sense. Follow the option chain. Follow the narrative. Okay? Again, really quick, this is what I'm going to be using moving forward. It's the same chart that we had. It's just delayed another month. So leading in the CPI, I want to see 413. I want to see a sell-off. Into Friday, and then I want to see us jump to 415 next week. And that is where I want AMC to make its move to $6 or $7. Okay? So I don't see AMC hitting 6 or 7 this week. I see it being next week. I have options all the way out to April 28th, both in the money and a little bit out of the money. But that is the trajectory, how I see it playing out. Delayed one more month. Have any questions, hit me up.